US President Donald Trump has predicted a significant increase in tariff revenue within a month, stating that import taxes will soon reach what he described as extremely strong levels. Trump noted that the US collected 25 billion USD in revenue last month, attributed to both his administration's management and increased tariffs on goods such as cars, aluminum, steel, and lumber. The president also addressed trade relations with other countries, asserting that some maintain closed markets while still benefiting from access to the US market. Join Economy Roast for an in-depth analysis in the next 15 minutes.
That our country made $25 billion last month, $25 billion. It hasn't done that in a long time, and a lot of that's done because of good management, and number one, and maybe even more importantly, the tariffs that are pouring in. We have tariffs pouring in at levels that we have never seen before, and they've only just started. That's really a small portion. It's mostly from cars and aluminum and steel, a little bit of lumber. But they'll really start in about another week, and then in about a month they'll come in at levels that are extremely strong. We're dealing with other countries, and certain countries that would rather have a deal than a regular tariff, and we're willing, if they're willing to open up. These are countries that have been shut to us, but we've been open to them. In other words, they wouldn't let us do business there, but they would do business in our country. Not a fair deal. So the European Union is talking to us. They want to open up their country. I would say Japan to a much lesser extent in terms of opening up their country. Japan, as you know, and we're very close to Japan, but they sell us millions and millions of cars a year. We sell them no cars because they won't accept our cars. And they won't accept much of our agriculture either. So,
on July 14th, EU Trade Commissioner Maros Sefcovic stated that the 30% tariffs threatened by U.S. President Trump would almost completely eliminate trade. Sefcovic also noted that the European Union and the U.S. are nearing a positive outcome for both sides in trade negotiations. The EU is demonstrating great patience and creativity to find a solution.
The feeling on our side was that we are very close to an agreement. I mean, we have been negotiating this agreement in principles for weeks, and I think that we've been almost there. And of course, there have been some sectoral issues upon which we've been negotiating. So my sense was we are approaching, the good outcome for both sides. I appreciate, though, that I was getting the heads up just before the letter was coming. And of course, I clearly recorded my disappointment about this measure because it puts us into a totally different dynamic. But nevertheless, I felt also from my United States counterparts that despite that letter, they are ready to continue the negotiations. We, of course, will use that opportunity because I'm absolutely 100% sure that negotiated solution is much better than the tension which we might have after the 1st of August if we will not land this one. 30% or anything about 30%. So eventually any additional counteraction from the United States, it has more or less the same effect. So it's practically it prohibits the trade. So if you're talking about 30% or 30% plus, there will be a huge impact on trade. It will be almost impossible to continue the trading as we are used in a transatlantic relationship. And if you look at the impact this would have, so I have to say the transatlantic supply chains would be heavily affected on both sides of Atlantic. We are showing this enormous patience, enormous creativity to find the solutions. But if it stays 30 plus, simply the trading as we know it will not continue with a huge negative effect on both sides of the Atlantic. And therefore, I think we have to do, and I will definitely do everything I can to prevent this super negative scenario. Thank you very much. I have to see you at the press conference. Bye bye.
I guess everybody realized that we are dealing with a counterpart who is, to put it diplomatic, not as predictable as one could wish, but that's the reality of life, something we have to deal with. And I guess the best position for us is to stay united, to have the discussion among ourselves in closed settings, and to communicate in the open space with a very, very clear message. And I hope that that clear message will be, we don't want any kind of trade war. It is in no one's interest. We want a fair deal. But, of course, if we are met with tariffs, which is unfair, we should be ready to countermeasure this.
According to the European Council, bilateral EU-US trade in goods and services reached a value of €1.68 trillion, 1.96 trillion USD, last year. The Council states that these partners account for nearly 30% of global trade in goods and services. On July 13th, the EU announced it would delay implementing planned countermeasures on €21 billion, 25 billion USD worth of US exports from July 14th to early August to allow more time to negotiate an agreement. These countermeasures were in retaliation for Washington's imposition of a 25% tariff on all steel and aluminum imports. On the same day, European stocks fell, led by automotive shares, due to concerns among investors over U.S. President Donald Trump's latest threat to impose heavy tariffs on the European Union and Mexico. The pan-European STOXX 600 index dropped 0.5% to 544.74 points as of 8:30 GMT. Other regional indices also declined except for the UK's FTSE 100, which rose 0.2%. Carmakers such as Porsche fell 2.4%, while BMW and Mercedes-Benz each dropped 2%. Volkswagen declined 1.9%. Just before noon, 10 GMT, Germany's DAX index fell 172 points, or 0.72%, to 24,080 points.
Investors are nervous. Market uncertainty is back. Donald Trump has unsettled the markets again with his tariff announcements to introduce 30% tariffs on the EU from 1st August. In this respect, the DAX started weaker, investors are taking profits and watching the whole thing from the sidelines for the time being. The markets are somewhat surprised by Donald Trump's actions. It is a relatively unconventional approach. This is putting the markets back into uncertainty. The EU is therefore well advised to refrain from taking countermeasures, as has already been announced, and to enter into negotiations. China can be mentioned as a counterexample that things can be positive despite high customs duties. We saw a significant increase in exports here in June. The reason for this was, of course, that export deliveries were brought forward due to Donald Trump's tough tariffs, which will take effect later.
President Donald Trump's plan to impose a 30% tariff on EU goods could disrupt Poland's exports to the United States. Marek Wazinski, an economist at the Polish Economic Institute, stated that his team calculated a 20% retaliatory tariff between the EU and the US would reduce the GDP of this Central Eastern European economic powerhouse by 0.33%. Wazinski noted that Trump's announcement on July 12th of an even higher 30% tariff would cause exports to the U.S. to stagnate. However, Wazinski said Poland would be partially shielded from these tariffs because it exports relatively little directly to the U.S. Poland is a major producer of automotive parts, often used in vehicle assembly and exported from countries like Germany. Wazinski added that Poland is in a better position compared to smaller Central European economies like Slovakia and Hungary, both of which rely more heavily on direct exports to the U.S.
30% tariff rate for the EU, and we don't know what will exactly be implemented on the 1st of August. If there is the case, of course, it will be quite a huge impact because the United States of America are not the main partner in exports of Polish goods and services. They are, when it comes to exports of goods, it's the 8th largest export partner. If we take exports not only in goods, but in value added, we have a lot of indirect links with the United States via, for example, Germany and other EU member states, also via Canada and Mexico. So in all, United States are the second largest export or actually economic partner in the world for Poland. If there is a total trade war of 20% tariffs of US on EU and EU on US in the same amount. And it would mean for Polish economy 0.33% GDP loss in short term, meaning 1-2 years. So of course 30% tariff is not something that we calculated, and it seems this amount of tariffs should stop the exports to the US. So of course this impact could be quite high. Yeah, so Poland is in a better situation than Hungary or Slovakia for sure. A little bit quite close when it comes to Czech Republic, but still we are bigger economies than they are, and we are more diversified. We are not, for example, Slovakia and Hungary, they are very much focused on the automotive sector. Of course, we can seek free trade agreements that will promote EU exports to other parts of the world, but the market structure will be always different, and the demand on goods will be different. So maybe it won't be so premium goods that we will be able to export as to the EU, to the US market. So in this way, we need not only to look for other markets in the world that we can export to, we need to also more consist on our own market, so to boost it, invest more.
A study by the Yale Budget Lab shows that President Donald Trump's latest tariff actions have raised the average effective import tariff on all goods to 20.6%, the highest since 1910. This analysis highlights the rapid escalation of Trump's tariff announcements, including a 30% tariff on Mexico, 35% on Canada, and 50% on copper, along with various other tariffs. U.S. stock markets saw modest gains on July 14th as investors prepared for the second quarter earnings season while trade tensions heightened uncertainty. The Dow Jones Industrial Average rose 88.14 points, or 0.20%, closing at 44,459.65. The S&P 500 gained 8.81 points, or 0.14%, reaching 6,268.56. The Nasdaq Composite increased 54.80 points, or 0.27%, closing at a record high of 20,634 points. 7 of the 11 major S&P 500 sectors ended the session in positive territory, with communication services and financials leading gains at 0.73% and 0.67% respectively. Energy and materials were the biggest decliners, falling 1.2% and 0.44% respectively. Investors are closely monitoring signs that previous tariffs have begun to drive up prices, which could influence the Federal Reserve's interest rate decision expected in just over 2 weeks. On July 14th, Trump escalated tensions with Russia, threatening so-called secondary tariffs of around 100% and pledging additional U.S. military support for Ukraine. In the bond market, the yield on the 10-year U.S. Treasury note rose to 4.43% from 4.42% on July 11th. The 30-year Treasury bond yield increased by 1.4 basis points to 4.971%, the highest since June 3rd. Among the largest tech companies, Alphabet and Tesla each gained about 1% on July 14th. Amazon, Meta Platforms, and Broadcom saw modest gains, while Apple fell 1.2%. NVIDIA, which recently became the first company to surpass a $4 trillion USD market valuation, dropped 0.52%, and Microsoft saw a slight decline.